Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries on the program. Top market experts join in to help you understand the right strategies that you must adopt on the stocks that you hold in your portfolios. Now, in case you are here for the first time, that's the WhatsApp number that's flashing on your screens where you need to send me all your questions. You can also log on to our YouTube channel and send me the questions on the Daily Calls live in the comment section, and I'll be happy to take that also with our top guest who will be joining in shortly as well. We will be joined by Kiran Jani, the head of technical research at Jain Broking, first from 12 to 12:30, and then after that Ruchit Jain will be joining in. He is the vice president and head of equity technical research at Motilal Oswal Financial Services. But Kiran is with us. Kiran, warm welcome. Good afternoon to you. How are you looking at the markets after the tariff tantrum that continues to hamper all the sentiment on D Street?
Hello everyone. So overall, if we look at the market structure, definitely we are trading near the important support level. If you discuss about Nifty, then Nifty is trading somewhere around its most important trading support like 24,500. Today, market has opened below its important support level of 100 days moving average after yesterday's additional tariff news. Now, if you look at the Nifty has started rally from 4th April from somewhere around 21,700 when the first time tariff news came out, and it made a high during June month, somewhere around 25,600. And if you mark the Fibonacci retracement level, the important level was 23%, which is 24,700. Now that is broken down. One more 24,500, which was a psychology level as well as 100 days moving average. Today the challenge is that okay, market is whether going to close above that level or not. But if today market is sustaining below, as of now it is sustaining only, but the closing is also below 24,500, then this pain can still continue till 24,200 to 24,150. So as of now, whoever is holding the long position, keep a closing basis stop loss of 24,500. If market is not sustaining below 24,500, then only we can expect recovery. So conditional buy on Nifty. If market sustaining about 24,500, then you can go long with the strict stop loss below 24,200 for the target of 25,000 for this August month. Coming to the Bank Nifty, if you look at the tariff news is coming on very selective sector. So banking is something not covered under the tariff, and that is what we can see also. Yesterday also PSU Bank supported market very well, but today since morning it is not supporting. Bank Nifty already trading near its important level. So 55,000 to 55,200, that is the major support. If market is not breaching 55,000 support, then we can expect some recovery also. So as of now, market is trading somewhere around 55,150, 160. Wait for some recovery. At least let market to cross above 55,200 in intraday. If market crossing above 55,200, then we can expect a smart recovery also. So keep a two-level watch, 55,200 for the Bank Nifty and 24,500 for the Nifty. If this both level crosses in intraday basis, we can expect a short covering for sure.
Okay, fair point. Let me just quickly look at how the questions are coming in and welcome all our viewers as well. So, YouTube we have Shubham Malik and Satyanarayan Rao Kulkarni joining in, Somalia joining in. Warm welcome to all of you. WhatsApp also Mr. Dasaradhi has written in, Shubham, Chandan, Mohit, they've all written in early on the show as well. So, welcome to all of you. I will be taking up all your questions, so stay tuned in. First up, let's take a question from Shomalia Biswas. He's from Kolkata. He says, I have 300 shares of Nalco at 188. I want to know about the stop loss and the target and the whole duration that I should be looking at on Nalco from the aluminum space, bought at 188.6.
So if you look at the Nalco, the overall, the metal is one more sector which is not covered under the tariff point. But because of high beta sector, we can see the volatility is there. Now, overall, National Aluminium has created a very good pattern. The stock price is trading below its 200 moving average, but it is also trading above its important moving averages. So as of now, Nalco is not, if Nalco is not breaking 180, so 180 would be the stop loss. Keep a strict stop loss of 180. If 180 is not broken down, then we can expect price target of 200. So for the target of 200, you can hold Nalco with the strict stop loss of 180.
Okay, let's take another one. This one is from Momita. She's also from Kolkata. She says, Hi Sakshi, I want to know about my portfolio because it's in the red after a long time. Actually, I have CAMs in my portfolio and I'm sitting on 10% profit here. So I want to know whether I should exit this also right now. And will there be any good news for the next 6 to 12 odd months, or will it remain to be, a subdued and negative market? Okay, for sure, Momita will help you out. What about the portfolios, that are turning red for a lot of our viewers? What should they be really looking at understanding there? And specifically on CAMs, a 10% profit, should one exit with a profit?
So first, start with the camps. So overall, I prefer in capital market the growing. We are on growing stage, so capital market stock should be there in the portfolio for sure, like a broking stock or maybe the platform which are helping financial market like CDSL, NSDL is now there, CAMS is there, Fintech is there, and the broking stocks also there. So I prefer CAM should be hold at current market price, keep a strict stop loss below 3,500. 3,500 is not broken down, then you can expect again price rise somewhere around 4,000 to 4,500. So as of now, risk reward ratio is 1 is to 1, but definitely one can go long. Now, let me give you some holistic answer where the our viewers or everyone is thinking about the portfolio that are turning in the red. Now the point is that Sakshi ma'am, overall we have seen certain kind of this kind of a news certainly market coming into the market, but those news are very short-lived. Now the additional tariff and whatever the tariff news are going, they have a deadline of 28th of August. And we are living in very dependable world, and we don't think any country can independently create anything. So definitely we need US, and US is also need us. So this is a both side. We believe that negotiation will be done, and this negotiation will be done before 27th August, August only. So use this opportunity. We have seen Corona types of bad news also, where the whole world is locked down. And now this tariff news is not that bad as the Corona. So I believe that we already have seen a worst behind us 4 5 years back, and these news are very short-lived. So I believe that use this particular news to create the portfolio. Either you are using this kind of a news to exit your portfolio. Generally, this is the festival season is going on. When we are opening our festival, when we are opening our e-commerce applications, generally on festival where there is a sale. So this is actually considered as a monsoon or maybe festival sale on stock market. Use this particular correction phase and buy quality stocks. And you can also go with the sector which are not covered into the tariff, like bank, FMCG, metal, cements. Those are stocks are not covered into the tariff. Tomorrow, if tariff is supposed not going to be announced on this particular sector, so keep accumulating these stocks and hold your portfolio. Definitely a green color waiting for you at the side.
Okay, fair point. All right, what we'll do is we'll also look forward to some other questions coming in. We have this question from Anas Ansari. He's from Uttar Pradesh and he says, is it good to buy Tata Motors at the current price?
So first of all, as a disclaimer point of view, we already holding Tata Motor in our family portfolio. Now coming to the Tata Motor overall chart pattern, the stock price started correcting from 1200. It made a panic bottom somewhere around 536. From 536, it went up to 750. Now again, it started trading into the falling channel only recently. Stock price has broken down is all important moving averages also. Given the fact there are two fundamental tailwind for the auto sector, and we are very bullish on two-wheeler and as well as the four-wheeler, because this year we can see the tax benefit is there. The income up to 12 lakhs, there is no tax. So people are going to save the tax. And beyond that, people who are doing investment under ATC because of the tax saving, that is also going to be a consumable or maybe that is also going to be a discretionary spending. So now, if I am riding a two-wheeler, I will definitely look for the four-wheeler, and if I am riding a four-wheeler, I will look for the luxury car. So in the luxury car or maybe in I can say middle class people can definitely afford a Tata Motor car. So that's the reason we are very much bullish on Tata Motor. That downline of 6 months, 8 months, Tata Motor definitely will recover and deliver a very good result from current level. Recently, they have acquired one heavy weightage company. That's the only reason Tata Motor is started falling again from 700 level. But overall, the fundamental themes look very much promising. You can definitely go long on Tata Motor at current market price. Keep a little bit deep pocket keep a stop loss as a 550. 550 is not broken down, you can definitely see some good amount of rally on Tata Motor in upcoming time.
ओके गॉट दैट। चलिए अगला सवाल लेते हैं। ये हमारे पास सौरभ गोयल का सवाल आया है। लिखते हैं, गुड आफ्टरनून साक्षी, आई हैव बॉट BLSE इंटरनेशनल एट 324 लेवल्स। ओके, लेट्स लुक एट द BLS इंटरनेशनल प्राइसेस। 401 पर अभी चल रहा है, आपने 324 पर लिया है तो प्रॉफिट में हैं आप। यहाँ पर जानना चाहते हैं कि अब टारगेट और स्टॉप लॉस क्या रखें BLS इंटरनेशनल।
So overall, BLS International has formed a ascending triangle pattern. Stock price is trading above its 200 days moving average. Overall, chart pattern is very strong, very much strong. You can definitely hold this particular stock with the strict stop loss of 370 rupees. If 370 is not broken down, then you can expect price target of somewhere around 500. So chart pattern is very strong. Definitely, you can hold with the strict stop loss of 370.
Okay, let's take another one. This one is Satyanarayan Rao Kulkarni. He's saying that I hold Bosch at 38,000 levels. I want to know whether I should hold or sell. He's holding on a 550 rupee kind of a per share profit right now. Let's find out what should be done now.
So overall, Bosch has given a breakout from 33,000 level, and after the breakout, stock price has given a fantastic rally towards 41,000. Now from 41,400, stock price is continuously trading into the falling channel on intraday basis. Today is the third day when stock price opened with the gap down. However, it is recovering from lower side. Now the interesting fact is that previously stock price has an all-time high somewhere around 38,700, 800 cluster zone, and from that stock price corrected to 26,000. So now 28,000 would be the strong support. Recently also we have seen some sort of consolidation near that particular price only. So as of now, I believe one should hold this particular stock. If anyone wants to go long, they can go long. Keep a strict stop loss below 37,500. If 37,500 is not broken down, then you can again expect price target of 41,000. So for the 41,000 target, you can hold with the strict stop loss of 37,500.
Fair point. Okay, let's look at the next question. This one is from, we have one of these questions coming in from our WhatsApp then. This is on the stock Bandhan Bank. Mohit from Ludhiana has written this. And the question is, I am holding this stock at 187 for 2 years time frame. What should I do?
Bandhan Bank, right? We are discussing.
Bandhan Bank, that's right. At 187 he is bought it. Currently it's at 164 level, so it slipped down. What's the overall view till the next 2 years?
So for 2 years, definitely he can hold Bandhan Bank. If you look at the monthly chart on Bandhan Bank recently on monthly chart created a very good bottom. During the corona, we have seen a panic bottom towards a 160, 140 level, and from that it has recovered. Now again, stock price challenged those level, but however, stock price is not sustained below those level, and it is started rising, trading into the rising channel. Now in July month, overall market was down, so therefore the stock price was trading into the falling channel only. But overall chart pattern suggesting us and also viewer wants to hold this particular stock for next 2 years. So keep a strict stop loss below 150 and hold this particular stock. If 150 is not broken down, then you can expect a smart recovery. And during this recovery, once the stock price sustaining about 200, then you can expect a far big target also. So as of now, 150 is the stop loss. First target is 200. Once the 200 crosses, we can trail the stop loss and hold this particular stock.
Okay, let's take another one. This one is from one of our viewers, Swati from Jalandhar. She says, hi ma'am, please look at my question, that's flare writing. I already have this stock in my portfolio at 342. What should I do? Hold or sell or average this one? Limited charts for you to study, a recently listed stock actually.
Correct. If you look at the flare writing, of course, a favorite ball pen when you are into college time. But now coming to the its trading price chart, after IPO, stock price is continuously trading into the falling channel only. Recently, stock price has given a breakout from cup and handle pattern somewhere around 290, 295. After the breakout, stock price went up to 350. Again, it is facing a resistance and coming down near its breakout level. So as of now, definitely you can hold this particular stock, but keep a strict stop loss below 290. If price is breaking down 290, then this correction can be go a little bit deeper. So as of now, you hold this particular stock with stop loss of 290, and if 290 is not broken down, then 350 would be the first target. Once 350 crosses, then we can expect some far amount of good rally on fairness writing.
Okay, let's take another one. This one is from Rajesh. He wants to know about HFCL, Himachal Futuristic Corporation Limited, and he's already bought this stock in his portfolio. The price at actually which he bought this one is at 20 rupees per share, and he is holding about 10,000 शेयर. सो फर्स्ट आप राजेश जी कंग्रेचुलेशंस, 20 रुपए के भाव पे आपने लिया है. फिलहाल 70-75 के आसपास के लेवल्स देखने को मिल रहे हैं, तो आप प्रॉफिट्स में हैं. जानना यही चाहते हैं कि प्रॉफिट बुक कर लें या फिर होल्ड करें.
So again, congratulations that you are holding this kind of a patience required when you are trading in the market for the long term time. Now the viewer has entered into the stock somewhere around 20 rupees. After that, we have seen recently stock price moved to the 170 level, and after that the prices is continuously falling. On monthly chart, it is breaking down its important support. So definitely at least 50% profit you should book, and for remaining 50% you keep a strict stop loss of 64 rupees. If 64 is broken down, then you can expect some far deep corrections also. So as of now, book 50% and remaining 50% keep a strict stop loss of 64.
Okay, taking the next one. This one is from Akhilesh. He says, "Hi, ma'am. I have Jupiter wagons in my portfolio, about at 340 rupees. I bought 50 shares. I want to know, can I add some more stocks on the dips? Right now, the stock is at 332. Railway stocks, not much have been moving at this in the recent times, because the markets overall have been also consolidating quite a bit. But on Jupiter wagons, which has been an erstwhile railway stock favorite, how would you advise?"
So coming to the Jupiter wagons, overall the wagon shares has delivered a very good return, and now it is into the time correction phase only. So if you are okay to hold for at least 1 to 2 years, then only you can go long on Jupiter wagons on the dip. So you wait for price correction somewhere around 300 or maybe 280. If you are getting those price, go for long position on Jupiter wagons, but keep in the mind that you should wait for at least 1 year minimum. So if you're okay to give 1 year, then you can go long Jupiter wagons any range between around 300. Keep a strict stop loss below 270, and if 270 is holded during that time, then we can expect price target of 350 to 400 for sure.
Okay, let's take the next one. This one is another one. This one is from Vishesh Mani Tripathi. ये लिखते हैं, मैम मैंने अल्कोहल्स एंड ब्रूरीज को ख़रीदा है और बाय प्राइस मेरा 1060 है और क्वांटिटी 60 शेयर्स की है. यहाँ पर एवरेज करूँ या फिर निकल जाऊँ, ये जानना चाहते हैं आपसे अल्कोहल्स एंड ब्रूरीज पर.
I'm not able to find the stock. If you can help me.
Okay, let me just quickly pull out the stock code for you. This is Associated Alcohols and Breweries Limited actually. This is ASALCBR, currently trading at 1029 per share, and the question is that I bought it at 1060. यहाँ पर क्या करें?
Correct. Looking at the overall chart pattern of Associate Alcohol and Beverages, the stock price made a high somewhere around 1400 during March 2025. After that, continuously trading into the falling channel. Now, recently, stock price has broken down its all important moving averages also, and the 1,000 rupees is the a very good support, we can say. Earlier, 1,000 rupees acted as a resistance only. Once the prices crosses, it rally up to the 1,400 rupees. So as of now, if you are holding this particular stock, you can keep a strict stop loss below 1,000. So somewhere around 980 or maybe 970 would be the stop loss. If prices is not breaking down that particular level, you hold this particular stock. As of now, the target looks like 1200 to 1250. If prices crosses those levels, then a fresh rally can also come. So as of now, with the strict stop loss of 980, you hold this particular stock for the target of 1250.
Okay, let's take the next one. This one is from Shubham Malik. He says, "Good afternoon, Sakshi. Good afternoon to you, Shubham ji. The question is on MTAR Technologies. He's from Bangalore, and he says, I've been holding MTAR Tech at the rate of 2,395. About 32 shares is what he has in his portfolio, and he's been holding on to this stock since 2 years. What would your suggestion be? Can this stock be held on to for the next 5-7 years in the portfolio, and what will be the outlook? Very long term horizon he has."
Yes, so if you look at the MTAR technology, so MTAR technology is trading somewhere around 1,500 as of now. The stock price made a high somewhere around at 3,000 rupees, and from 3,000 rupees it is continuously trading into the falling channel only. Now that falling channel ended somewhere around 1200. From 1200 level, stock again started into trading into the rising channel. Stock price has made a triple bottom pattern, gave a breakout of somewhere around 1500. Again from 1500 to 1800, and from 1800 stock prices retested its 1500 breakout level, which was previously retested. Now at 1500, if you are holding this particular stock, you can hold. A viewer who are watching us as of now, they wants to go long, they can also go long on entire technology at current market price. If stock price is holding 1400 level, then you can definitely expect a good amount of rally, at least towards 1800 to 1900 for sure. So stock price is very promising. You can go long with the strict stop loss below 1400 for sure.
Okay, let's take another one. This one is again from one of our viewers on our YouTube channel. Again, we have a lot of questions that are coming in. This one is from Arun Kumar Gupta. He says, can you please suggest the best level to enter Reliance Industries and also Geo Financial Services? What would you advise?
Geo Finance.
And Reliance Industries.
Okay. If you look at, let's discuss first Reliance Industries. So, as a safety point of view, definitely Reliance should be in your portfolio at current market price. You look at the overall structure is weakening. Definitely, the Reliance is also giving a breakdown from the flag and pole pattern. But considering this overhang news, Reliance, HUL, HDFC Bank definitely will help market to recover from lower level, or maybe it can give a support also. But as of now, Reliance is breaking down its 100 days moving average. So stay a little bit cautious, but it is into the accumulation zone only. It has given a breakout earlier from 1350, 1340 level. Today, it is trading at 1380. So any dips toward 1350 would be the great buy. Go long, keep a strict stop loss below 1300. If you are getting prices somewhere around 350, it is a very good buy. Stop loss is 1300. If 1300 is held, then we can expect a smart recovery towards 1500 for sure. So Reliance, definitely you can go long. Coming to the Geo Finance has given a breakout, a very big pattern, cup and handle pattern. Now, recently, out of that cup and handle pattern, it's retested its lower level of 305. So, 305 is the promising stop loss. Keep that stop loss of 305. Hold this particular stock, or you can go long at current market price. If 305 is not broken down, then you can expect price target of 360 to 400 in short time. So, definitely, Geo Finance and Reliance both are a very good buy at current market price.
Okay, fair point. Let's take another one. This one is from Akshay Agarwal. He says, I'm holding Trent and he has about 85 shares bought at 5600 levels. He says, I'm now sitting in losses. What exactly should I be doing? Now, Akshay, Trent was actually a stock that was the best performer on the Nifty in the year 2024. And a lot of investors, even, ace investors, market experts, many of them, they said that, they missed buying this one for their clients and they were feeling a FOMO on that one as well. But of course, this year, it's turned out to be a rather consolidative and slightly on a weaker side for Trent. But the company is strong. What exactly should you be doing with your losses is something that will help us understand is like whether you have an appetite to hold on for long. Because it's not like a small ticket stock or a penny stock where, investors, if they're facing losses, what they should be worried at this point in time. Right, Kiran?
Right, absolutely. So very good piece of advice from your side. So like generally when FOMO started in any stock, everyone like from veteran investor to expert, everyone is talking about a single stock. So retail or in general public are just claiming on this particular stock without understanding the horizon who is talking about the trend. Say for example, the investor who is holding for 5 years and he's keep talking about trend and asking that stock prices or stock, we are very bullish on this particular stock, but just understand their risk appetite and that holding period. We are a trader or we are an investor, first we should identify that and then only we should follow someone. Now coming back to the trend daily price chart, stock price had made a very good support or very good bottom somewhere around 4500. So if you are holding the trend, definitely you keep hold with the strict stop loss of 4500. After a very good rally, the stock price into the time wise corrections only. We are not expecting a major price wise correction should happen, but again, risk management is key thing. So keep a 4500 as a key stop loss. If 4500 broken down, then you book your losses and wait for fresh entry. So as of now, 4500 is the stop loss. If 4500 is not broken down, then you can expect price target of 63 6400. And if prices reaches, you can again raise your question or call here. Sakshi ma'am will help you.
Okay, fair point. Let's take another one then. This one is from one of our other viewers who's joining in on our WhatsApp and sending their questions. This one is Mr. Dasaradi. He says, I'm holding PTC shares at 198 and also Lakshmi Dental. What should I be doing on both these stocks? Hold or exit? PTC India bought at 198, Kiran, and right now it's trading at 178, so probably a 20 rupee per share kind of a loss. Lakshmi Dental holding at 496.
So PTC India looks very much promising. Recently, stock price has given a breakout from inverted head and shoulder pattern. Stock price is trading above 100 and 200 is moving average. So definitely you can hold this PTC India with the strict stop loss of 170. If 170 is not broken down, then you can expect price target of 220, 250 in short time. So BTC India hold definitely. Coming to the Lakshmi Dental, after IPO stock price continuously trading into the falling channel only. So recently stock price has broken down. These all important moving averages and important support also. So as of now, avoid would be the better solution or maybe better suggestion. But still, if you are holding this particular stock, use 390 as a strict stop loss. Once 390 broken down, you can expect some deeper corrections as of now. So 390 would be the strict stop loss for Lakshmi Dental and 170 for the PTC India.
Okay, fair point. I hope this is also giving you understanding as to how to go about your stocks in your portfolio. Let's look at another one. This one is from Chandra Singh Dodhia. He's from New Delhi and he wants to know about KFin Tech, and he wants to know should he take a fresh entry over the next 3 to 4 years on KFin Tech.
Yes, definitely. We just discussed camps. So K Fintech is also similar stock only. If you are ready to give 3 to 4 years, then sir, on every dip you should go long. As of now, looking at the technical pattern, no doubt the stock price is trading below its all important moving averages. So wait little longer. You can get some. You can get probably 900 to 950 level. If those price you are getting, it is the best level to enter. So wait for some more time. 950 would be the best price to enter. Keep a strict stop loss below 900 and you can go long on the dip. So as of now, on the dip for the horizon of 3 to 4 years, definitely you can go long on Cape Intech.
Okay. Next, we have this question from Ram Kishore from Rajasthan, Kiran. He wants to know about Bajaj Housing Finance. यहाँ पर ये लिखते हैं कि 621 शेयर्स इन्होंने लिए हुए हैं और 151 पर. अब क्या करना चाहिए इनको, कैसे रणनीति बनाएं बजाज हाउसिंग फाइनेंस पर, ये जानना चाहते हैं आपसे.
जो देखिए बजाज हाउसिंग फाइनेंस का जिस दिन से आईपीओ आया है, आईपीओ के 1 2 दिन के बाद से कंटिन्यूअसली फॉलिंग चैनल के अंदर ट्रेड कर रहा है. इंपॉर्टेंट मूविंग एवरेजेस के ऊपर गया लेकिन सस्टेन नहीं कर पाया, वहां से भी डिप आ गया. अब आप देखो तो 120 उसका एक मेजर सपोर्ट था, उसको ब्रेक कर दिया मेरे हिसाब से. यहाँ पे टेक्निकली तो ब्रेकडाउन लग रहा है, नो डाउट ब्रांडेड कंपनी है बजाज फाइनेंस, बजाज फिनसर्व ने काफी अच्छे रिटर्न्स दिए हैं. तो इसको चलते काफी लोग इसके ऊपर बुलिश है, पर टेक्निकली स्टॉक बहुत वीकन हो चुका है. तो मेरे हिसाब से एक बार के लिए यहाँ पे एग्जिट कर लीजिए, वेट एंड वॉच कीजिए. 120 के ऊपर फ्रेश खरीदारी आप कर सकते हो. तो या तो आप एग्जिट कर लीजिए या तो फिर 105 100 रुपए का कोई स्टॉप लॉस मेंटेन करना, क्योंकि वो लेवल ब्रेक करेंगे तो और भी नीचे जा सकता है. और फ्रेश खरीदारी के लिए तो एक 120 क्रॉस करे उसके बाद.
ठीक है. नेक्स्ट हमारे पास एक और सवाल आया है, ये ललित का है. ये लिखते हैं कि मैम आई नीड एन ओवरव्यू ऑन अपोलो टायर्स एंड आई हैव अ 3 year टाइम होराइजन, सो शुड आई लुक एट दिस स्टॉक एट द करंट लेवल्स एज वेल. Autos and auto ancillaries, we all know, Kiran, have been going through some or the other of volatile kind of times, uncertain periods as well. How would you look at a tire company like Apollo Tires at this stage, and specifically on the charts, what does it suggest?
See, overall, we are very much bullish on auto. But coming to the auto ancillaries and particularly tire stock, they had a very good rally. After the rally, since 2024, we can see the tire stocks into the consolidation zone only. Particularly, Apollo Tire made a three top somewhere around 550, and every time it is not able to cross those particular tops and falling down. Now, this time, after making that touching that top of 550, stock price came down by 380. After 380 recovery started, but again this time stock price even not able to touch their previous top. So that is showing us inherent weakness in this particular stock. Stock price is trading below its all important moving averages. So if you are holding this particular stock, hold with the strict stop loss of 400, because if 400 broken down, then we can expect some fair corrections also. In tire stocks only, if you want to buy a fresh, then you can look around the C8 tire. C8 tire has given a breakout at 3100 rupees. After breakout, stock price touched 4000, and now from the 4000 it is again trading near 3200. where the 200 is moving average is also there. Previously 3100 breakout level is also available. So 3200 to 3100 is the accumulation zone for the C8. You can accumulate this particular stock with the strict stop loss of 3000, and you can expect price target of 4000 for sure. So C8 looks promising than the Apollo Tyre.
ओके गॉट दैट चलिए बहुत बहुत शुक्रिया किरण हमारे साथ जुड़े रहने के लिए एंड तमाम क्वेश्चंस को सभी को एड्रेस करने के लिए हमारे व्यूअर्स के लिए थैंक यू सो मच फॉर योर टाइम एज
Yeah.
ऑलवेज ऑलराइट व्यूअर्स गेटिंग इनटू द सेकंड segment of our daily calls edition now we are going to be welcoming Ruchit Jain. He is the Vice President and Head of Equity Technical Research, Wealth Management at Motilal Oswal Financial Services. Hi Ruchit, warm welcome to you as well. And help us understand with your fresh take on the markets. We all know how tariff threats are kind of trying to worsen the sentiments, even though the beginning reaction today was mature. But it's also the expiry session today. So how are you going to play the rest of the session, the second half particularly, and what's your expectation on the markets going forward?
Good afternoon, Sakshi. So, Sakshi, if you look at the recent past, then we have already been in a corrective phase since the start of July. So I think it's been over 1 month that we have made the recent swing high on the Nifty. So I think it's just not today's trading session, but our markets is in a corrective phase, which definitely on a longer term chart just seems to be a correction within an uptrend. But yes, in the short term, I think a lot of uncertainties related to this tariffs are there, and till the uncertainty is not over, I think no markets would continue to see such kind of short-term corrections on the negative side. So on the lower side, 24,450, 400, where we are trading right now, is the immediate support which have broken, and we could see some selling pressure towards 24,100 to 200 range, where the 200 DMA for the index is placed. Now the market breadth since last few days is not turning up, which is the main thing. And if you look at do some correlation with the other factors, and I think USD INR is one thing which we are very closely keeping a watch on. Even in the entire price-wise corrective phase, which we saw recently in the month of October 2024 to March 2025, the prime reason for that correction was the rise in dollar index and the depreciation of INR. So I think all the dollar index is still not that up, but because all the other factors such as FIS selling and tariff-related news, we have seen INR back towards that 88 levels, which is the cause of worry for the markets. So that correlation we are watching out quite closely, whether the INR crosses 88 or shows any kind of cool off from here on. So until we see that any kind of down move in the INR now coming in, no, I think no equity markets would continue to see some correction. Sometimes it would be some price-wise corrections what we are watching today. Some days it would be some time-wise corrections or consolidations. So better not to do any kind of bottom fishing and wait for some kind of reversals. Till then, some short-term cautiousness is advisable.
Okay, let's take some questions coming in for you, Ruchit. On our viewers, they are all looking to hear from you on the key questions that they are sending us. We'll take the first question. This one is from Sri Hari Krishna. He is from Hyderabad. He says, I'm holding Kalyan Jewelers at 555 levels and Ambuja Cements at 589. I want to know whether I should continue to hold or exit my position here. Let's start off with Kalyan Jewelers first. Bought at 555 odd levels. Earnings are likely to come in soon. What exactly would your thought process be on Kalyan Jewelers? How's the stock performing on the charts?
The charts, the short-term trend is still very much sideways for the stock. The immediate support for the stock is around 555 to 550 range, where the 200 DMA for the stock is placed. So I would recommend you can hold on with the stop loss below 550 on your existing positions, but won't recommend to add more positions over here. And as far as Ambuja Cement is concerned, I think no hold for the midterm perspective in Ambuja Cement. Cement as a sector, we have seen that in between good price volume actions were seen. So overall, we believe that the price wise downside for certain cement stocks from current levels also would be limited. But if the markets are not performing, so you cannot expect a single space to show any kind of significant price wise returns going ahead. But Ambuja Cements, I think, if you can give about 2 to 3 quarters view, then you should continue to hold on. 570, around 570, there's a good support placed for Ambuja Cement.
Okay, fair point. Let's take the next one. This one is from one of our viewers, Madhav. He's from Moradabad and he says, I'm holding 30 shares of Infosys in my portfolio at the price of 1500. I also want to add some more, about 20 stocks more in my portfolio. I want to know whether I should add at the current levels or are some more dips advisable that I should wait for, say around 1380 odd levels. Should I add there? What would your suggestion be, Ruchit?
So I would say wait for some kind of reversals to add more positions. So two things are there. One is IT has been a significant underperformer if you look at last few months. So we are not witnessing any that kind of buying interest in the IT. And within the IT names also, if you look at whenever IT stocks are showing any kind of pullback move, I think fresh buying interest is more in certain mid-cap IT names which are adopting AI and which could become future large cap names. I think such you should look
Yes.
for such kind of companies rather than doing fresh investment in companies which are already very big and may not give you that staggered returns from current levels. So in terms of that, it's not that Infosys will deliver any significant negative returns from here on. That's not the thing. If you stick with the same company, then I think any lower levels around 1350, 1330, those will be the levels where in case if you get the stock going ahead, then you can prefer fresh buyings because that's a very strong support over there. But simultaneously, I would also suggest you to look for mid cap IT companies, which is working more towards AI and going ahead or in the future, you could see such a good growth in such companies.
Okay, let's take another one, and this one is from Sandeep Jain. He is from Kishanganj in Bihar. He says, "Hi ma'am, good afternoon, Mr. Jain. कैसे हैं आप?" The question is on PG Electroplast. He already has his share in his portfolio. Now he bought this stock at 820. The second stock he has is from the mid-cap IT basket, and that is Quick Heal Technologies. This one he bought at 360. Now let's try and understand on both these stocks what's your suggestion. Last couple of weeks we actually saw a lot of action build up on PG Electroplast, but seems like it is now cooling off. Today also the stock is down by about 4%. What is your suggestion on PG Electroplast from the EMS space? And secondly, Quick Heal.
Doesn't look much positive. No, PG Electroplast charts, it's not very positive. Pullback moves were seen, but we are not witnessing that kind of volume-based buying happening on the stock. No, compared to what we have seen about 1.5 year back when the stock showed no significant run up. So I think at the most we would see some time-based correction in the stock. Technically, 710, 715 is the support range. So if 710 gets broken, then I think you can even look to exit from your existing long position. So 710 can be kept as a stop loss for Electroplast long positions. And Quick Heal is also in a downtrend. Been a participation. We have not seen participation on the positive side, even when the overall markets or all the broader markets were doing good in last 1.5 years. So I think what we can also see that recently the stock did give a pullback move in the month of June, but the prices are not even able to surpass the 200-day exponential moving average. So overall trend does not seem to be positive for Quick Heal. Can look to exit at current levels. Maybe if it shows any kind of reversal at lower levels, then you can reconsider later on. But as of now, the view is not positive technically on Quick Heal.
Okay, let's take the other one. This one is from one of our other viewers. This is Saurabh. He wants to know about Black Box share. He has invested in this one at 370 and he wants to know at what level should he look to book profit now.
The best thing is to keep a trailing stop loss. When you get a good entry points in the stock. So the stock has a good support base around 470 for now. So I would suggest to hold on your existing long positions and on your existing positions, keep stop loss somewhere a bit below 470. And as the stock goes up, then you can keep trailing your stop losses higher. We have seen some consolidation in the month of June, but the good thing is that even the broader markets have seen price-wise correction, this stock has seen more of a time-wise correction. So, which is a sign of a relative strength in the stock. So, hold on your existing positions, keep somewhere below stop loss somewhere below 470, and continue to ride this trend.
Okay, got that. Let's take the next one then. This one is from one of our viewers, GS Arun. He's from Hyderabad. Hi, Mr. Arun. The question is that I have bought 165 shares of ITC Hotels. bought at 252, and I want to know what exactly should I be doing on this stock now. Should I continue to hold on, or is there any opportunity to for the stock to go higher from these levels as well? What exactly would your advice be, Ruchit?
I would recommend to hold on the stock, but from a mid to long term perspective, not from a momentum or short term trading perspective. Overall, post listing, we did see some good buying interest when the stock was making high top, high bottom structure. I think it's just because of the market's correction, we have seen a cool off from the recent highs of 255, 260. But if I look at the price and the volume together, then when the stock was going up, relatively volumes are good. But when the stock has corrected from 260 to 225, we are not seeing any kind of volume based selling happening over there. So, when the stock comes down with lower volumes, so it's just because of the market conditions. And whenever the market conditions improve, I think ITC hotels should considerably do well. So, keep some midterm perspective and continue to hold your long positions.
Okay, let's take another one then. This one is from Mr. Shrikant. He's from Mysore. Mr. Shrikant, warm welcome. Good afternoon to you. The question is on Infosys. He says, I have 208 shares of Infosys bought at 1343, but I've actually lost hope of getting any good returns in the same. So I want to know, should I invest in Motilal Oswal mid cap fund, a regular plan? Should I sell Infosys and park that money in mutual fund? Now, Mr. Shrikant, we'll definitely help you out with a view on Infosys. There's also a view that Ruchit ji also shared a little bit earlier on the same, and but on the other hand, on Motilal Oswal Mid Cap Fund, there will be a difficulty in getting the view of from Mr. Ruchit Jain, as he is from the same conglomerate, and there will be certain limitations that he will not be able to advise you on this particular mid cap fund. But he can give you an overall view whether taking out your money from Infosys and parking in any mutual funds makes sense right now or not.
So both are quite different categories. If you are direct investor in the stocks, then you should look for stocks which have the potential to give high growth going ahead. Maybe some mid or large mid cap names, which has the potential to become good large cap names in next few years. So I think that should ideally be the strategy when you look for direct investing. And if you do not have the right knowledge to or not to go directly in the stocks, then definitely going with the mutual funds and giving the money to the mutual fund manager makes a good sense. But no, mid cap fund comparing with large cap company Infosys, I think that's not the right comparison to make. So I would suggest to look at from a very different perspective rather than combining these two. If you are a long term investor, I've already given the view on Infosys. Price wise, 1300, 1320. I think it's around your buying price only. That looks to be very strong support, which should not be broken. So you can hold on to your existing long positions if you're a long-term investor, but do not expect any exponential returns from this large cap IT company. You can expect market returns, but not exponential returns. And as far as mid cap space is concerned, I think it's a good time to buy mid cap funds in a staggered manner, since the markets are in a corrective phase, and usually buying on corrections can give that alpha when the market resumes the broader uptrend.
Okay, got that. I hope this has also helped you out in understanding a clear strategy there. Let me now look at some of the other questions that are coming in. Gunjan writes in, she says, I'm a big fan of Ruchit sir. I want to know from him on JSW Infra, what is the suggestion that he can give?
Thank you very much, Gunjan. So overall, JSW Infra, if you look at last 2.5 months, we are not witnessing any kind of trended phase in the stock. In the month of June 2024, I think it's not 2.5 months, it's almost 1 year, more than a year. So in June 2024, the stock was around 300 levels. Today also the stock is around 300 levels. So this has been more of a time-wise correction in the stock. But if you look at the longer-term picture, if you can have the view of next maybe couple of years or so, then I would recommend to continue to hold on the on your long positions, but not from a short-term perspective. The stock has not done anything in last 1 year. So short-term consolidation can still be seen. And whenever you make strategies to add more positions instead of consolidation phases, then always look to add positions whenever the stock corrects and comes near the support end or the lower end of the phase. And major support for JSW Infra, what I can see is somewhere around 270 to 75 kind of range. I don't know whether stock would go towards that level, but in case if we see any kind of correction towards that level, then use that opportunity to add long positions to your portfolio.
Okay. Got that. Let me take another question. This one is from Ankur Modi. He says, Hi Sakshi, I want to ask Ruchit sir two key questions. One is on the Trump tariffs and the impact on the stock markets in the short term and in the long term as well. Do you think the short term volatility is actually providing an opportunity to buy into the markets? That's one. And the second question that he has is on Imagica World and wants to know what is your outlook on this stock?
Yeah, so as far as Trump tariffs are concerned, I think it's a short-term impact, not a it won't make a big difference in a longer-term point of view. Our economy is one of the fastest growing economy in the world, and if you look at the exports that could be impacted if the tariffs stay so high, which the probability of which is very low. We have seen Trump doing these things with other countries as well. For China, they I think raise the tariffs at one point to about 200%. So I think, but that's practically we all know that it's not possible to do business at such high tariffs rate. So that things I think should get settled down going ahead. These are just negotiation tactics which may be going on. But at once things get settled down, our markets would react positively to that. It's just that uncertainty, markets don't like uncertainty, and hence some short-term corrections would be seen. Now the impact on the markets, if we see, then whatever sectors that are exporting to US. So if you look at the listed space, then whether there are very few company which gets impacted amongst the listed space. There are of course certain sectors where unlisted companies may be impacted, but from the listed space, just from a stock market perspective, I think that impact should be on very limited companies. So I don't think markets should worry much about that from a mid to long term perspective. So the mid to long term trend remains positive, and in fact, such corrections generally you see price corrections only on negative news. And whenever we see such price corrections on negative news flows, these are good opportunities to invest for your portfolio and keep some long and keep it for long term so that you get benefits. So these corrections, I believe, are good opportunity to enter fresh longs if you are a long term investor, and rather not to worry much about on the tariff front. These are just short term impact which is there on the market. Now, for coming to the second question of Imagica World, as of now, the technical trend is not that positive. It's just that whenever the stock is correcting towards 56, 60 kind of levels, we have seen buying interest rise in this year, maybe in Jan 25, March 25, or even recently in June. So around 56 to 60 is a good support zone for the stock. But apart from that support, the trend does not seems to be very positive. So at the best, I think around 60, 58, you can look to make fresh entry, but keeping a stop loss below 55.
Okay, got that. I hope this has helped you out in understanding a clear strategy. Arihant Pant writes in, says it's a very helpful show for us. Thank you, Arihant, for writing in. The question is on PPL Pharma. He has the stock at 200 levels, and he wants to know what exactly should I be doing, average or continue to hold here.
So the stock is trading around its support level, but within the pharma names, last few months the stock has not been an outperforming, or we have not seen any kind of significant buying interest coming in the stock. So I won't recommend putting fresh funds, and until we see any kind of reversals coming in the pharma space again, then you should look to review. 180 is the immediate support. So on your existing positions, you can keep a stop loss below 180 kind of levels if it's trading positions, but don't add more at current levels. You can just continue to hold your existing positions.
Okay, got that. Let's look at some other questions then. Jay Shiv writes in, he says it's a great show for us. Thank you, Jay. The question is on Adani Total Gas. Ruchit, he wants to know, he bought this stock at 600. So what exactly do you see as the outlook on Adani Total Gas now?
The technical sector is not positive for the stock. Even when the markets were doing well, the stock was an underperformer, and we do see pullback moves in the stock for 1 or 2 days in between. But we have not seen any kind of sustainable coming moves coming in Adani Total Gas. Major support is coming again around 540, 520 kind of range. So the short term, it's in a downtrend. So I would recommend to still not much below the cost price. So I would recommend to take an exit from the stock.
Okay, fair point. Well, all right, Ruchit, towards the end of the show, we'll ask you your top choice of stocks as well, so that a lot of our viewers who keep on asking this question can be benefited at one go. Your top choice of stocks. It's getting very difficult to select pockets where outperformance can come in such consolidative market. We've already seen 5 weeks of losses, and we're in the midweek now. What's exactly your thoughts then?
So it's actually one stock, and no, I would recommend also one strategy, which one can, which the investors or the traders can, see when picking up stocks. So whenever markets see such corrective phases, you should always look for outperformers within the correction. And those stocks which are showing time-wise correction, when the market is showing price-wise correction, I think those are the pockets, which generally sees a good outperformance whenever the market resumes their uptrend. No, I am as of now just watching those stocks which are not falling along with the broader markets. This is where the internal strength lies. Of course, they may not give immediate returns, but whenever the markets reverse or show pullback move, the return should be good over there. So I think two-wheeler space within the auto basket is showing some signs. Stocks such as TVS Motors is there, Hero MotoCorp is there. The recent price volume action have been very strong. So I would recommend to see this sector if one is looking from a bit midterm perspective. TVS Motors, of course, being an outperformer within the sector, would be the top choice, where one can look for buying opportunities at current levels.
Okay, fair point. Ruchit, thank you so much then for being with us on the program
Thank you.
and helping all our viewers get the answers to their queries on daily calls. Always a pleasure to speak to you. Thank you so much for being with
Thank you,
us.
sir.
All right, viewers, we'll wrap it up on that note on daily calls. 24,428, 145 points lower as far as Nifty is concerned. Let's try and find out where this really heads on to. So far, the ride has been pretty choppy, but it's also the expiry session. And we'll continue to track the market movement for you. Stay tuned with us. Earnings conversations, market moves, and of course, the closing edition at 3 p.m. coming in for you. So stay tuned.
Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra, together we rise.
India's economic architects, together on one powerful stage. From Nitin Gadkari to Arvind Panagaria and Montek Singh Ahluwalia. Visionaries who are shaping India's future. All debating the Viksit Bharat roadmap, where legacy meets leadership. Here, the real policy playbook. Finance, roads, reforms. Disinvestment, nothing is off the table. The inside views, uncensored. Only at Adani Business Today India at 100 8th August 2025, Shangri-La Eros, New Delhi.
Joined by Dr. Sajid Chinoy, Managing Director, Chief India Economist at JB Morgan. He's a member of that Economic Advisory Council. Neil